Yo guys, what's going on? Welcome to the call. I hope you guys all had an awesome weekend. It's a beautiful Sunday right now, guys, and we're gonna mark up some charts. That's kind of what we're here for, obviously. If you guys are new to the team, first off, welcome to the team. I guess I'll tell you a little bit about myself if you guys don't know me at all. I'm basically Josh. My last name's Amundsen. I'm 23. I've been trading for about 4 to 5 years now, and so I've traded a lot of different obviously markets and stuff. I started with stocks back in college when I was 18, stock options. And then eventually I got into cryptocurrency. And so I trade Bitcoin pretty much every single day. I trade chunks of Bitcoin. That's something that I right now am primarily focusing on. See, with trading, you kind of stay where you're doing the best at. I mean, you can switch up markets and stuff, but I do trade crypto. I trade currencies. I also trade commodities, which is like gold and stuff. But right now I'm primarily focusing on cryptocurrency, not for this call though. Maybe I'll teach you a thing or two about cryptocurrency though, because I do absolutely love it. But guys, pretty much I eventually got into Forex trading about a year and a half ago. I think it's a year and eight months now, actually. I basically, met a dude at Pepsi. I've said this a lot in the overviews, and he basically was trading. And so I walked up to him and he, showed me he was trading Forex and kind of explained what it was a little bit. And, I'd say 6 months later, I ended up finding this team. And so it just all kind of fell into my lap. And so this is what I do full time now. I do it out of college. You don't need to go to college to trade, obviously, guys. So what we're going to do on this call, this is basically a really good call for beginners. And it is going to be beneficial as well if you're not a beginner, because near the end, I'm going to get a little more advanced and kind of talk about some things that are, probably going to be a little confusing to people who are new. But in the beginning, you'll definitely learn some stuff that you don't know if you're brand new, guys. So I'm basically going to kind of just share my screen. If you guys have questions throughout this entire process, feel free to obviously message it in the chat. Just you can ask anything. This is obviously an environment where the goal is to learn. That's literally what the goal is. I'm basically going to show you guys how to mark up charts, how TradingView just works, from a very basic standpoint. And then a little bit about news, currency strength meter, and just some fundamental analysis, which is, related to news, guys. So again, ask questions if you guys have
Okay, hey, turn it up.
Let me go ahead and quickly.
I'm muted.
Real quick. I think I just heard something funny. But yeah, guys, let's go ahead and we will get this started. So let me go ahead and share my screen with you guys, okay? Awesome. So I'm going to go ahead and remove all this stuff off of the screen, and I'm going to go ahead and put it on the 1-day chart. So guys, what you're looking at right now, this is called, I can actually probably put it on my phone, or my bad, I can actually probably make it full screen. If you guys have any videos on the right side of your computer that are in the way at all, just know that you can drag those videos and move them around, the pictures of our faces, okay? So guys, let's go ahead and get this kind of started. So something that you want to know is, well, first off, I'm not going to be going over anything on the brokers. I'm not, placing trades. I'm not going to be, showing you, any of that kind of stuff. This is more about studying, because something with trading is 80% of the time you're just studying. That's all trading is. And 20% of the time you're actually placing trades. And so that's what we're going to kind of focus on right now, is studying, guys. It's actually, understanding how to mark up the charts, understanding what to pay attention to, and, kind of understand what's really going on more, guys. So right here, this is something called TradingView, guys. It's a very popular website. A lot of people use it for trading. However, on the Academy, we do have, if you go to IM Center and you log in, you can actually go to the strategies tab right here, guys. And if you click on the strategies tab, there are softwares we can use. And so I have something called the Elite Pack. So I have everything in the company, but there's tons of different softwares you can use. Most of you are high frequency Forex traders. So if you click on that, Liberty is one that everyone has. Hourglass is Matty Pips strategy. So tonight at 10 o'clock, when Matty Pips goes on, he's going to go over Hourglass and kind of explain what Cash Trap is. But yeah, if you were to click on Liberty though, guys, this is very similar to TradingView. You can see here they look pretty similar. There's the same tools on the left side and so on. So I recommend, if you're just marking up charts, use TradingView. If you are actually using the strategies though, 100% use Liberty, because that's built-in strategies that we have that teach you when to buy and when to sell, guys. So these are just some of the things that I obviously use in terms of tools. If you look at the left side here, guys, this toolbar, these are the things that I have favorited. I favorite these tools for pretty much everyone that's getting started. So I favorite the trend line. I also favorite the horizontal line, because you'll actually be drawing on your chart. That's, that's called technical analysis. I favorite the vertical line and the obviously the arrow. And if we come to this third one, I favorite the rectangle tool. And then the last one would be the Fibonacci retracement tool, which is Jake Bloomstrand. I think he's on this call right now. That's something that he specializes in. He actually has a video on YouTube where he goes over that. But guys, I would just favorite those tools. You don't have to, but it just makes it an ease of access. So let's go back over to TradingView real quick, guys. And we're just going to focus on that. So one thing I want to quickly cover, if you're brand new, this is where it gets, excuse me, this is where it gets down to the real basics, like the basics of basics. These guys right here, these are called candlesticks that you see on the chart. Red means going down, blue means going up, and they also represent a certain amount of time in the market. So right now, guys, these candlesticks, they all represent 1 day worth of time. And that's because in the top left corner, we're on the 1 day chart. This is the 1 day chart right here, guys. So, I could switch it to the 5-minute chart. So now all these candlesticks are 5 minutes worth of time. And so you can see right here, this blue one, there is, it's actually red now, but on the right side, you can see there's 3 minutes and 20 seconds left on this candlestick. And then a new one will open to the right of it. And so that's kind of what candlesticks are, guys. The reason why you don't just want to trade off of your broker and, obviously not use like TradingView or Liberty is because on your broker, it's only showing about usually 5 minutes worth of time in that window, 5 to 10 minutes worth of time. And if you think about that, that's only one of these candlesticks, 1 to 2 of these candlesticks. So when you're just trading off of the broker, like, IQ Cent or Race Option or Forex, whatever it is, that's nowhere near enough like chart. Like it's not nowhere near enough indication of which way the market's going to go just looking at that. You don't see any time. It's only 5 to 10 minutes worth. That's why you hop on here though, and you're able to zoom out and see the bigger picture of what the market's doing. That's why we use this, because you can see what's really going on in the bigger picture. You can see here, guys, we're looking at days and days and days and days of what's been happening to USD, JPY, US dollar and Japanese yen. That's why we use TradingView. You can't just hop on your broker and place trades. If you do, you're just completely freestyling it, and buddy, don't do it. So let's go ahead and go back to this 1 day chart. So guys, something that I want to just kick off from the start, if your goal is to trade on your own, learn how to trade on your own, get better at it and stuff, you want to basically identify 1 or 2, maybe 3 currency pairs that you want to focus on primarily. One thing that, a lot of people kind of forget is this is basically global economies that you're trading. You're trading a whole currency. And so you're trading an economy essentially. So that's why you just want to focus on 1, 2, or 3 currency pairs and really start to understand kind of how they move and, what times of the day they have their biggest movements. So for an example, on the right side here, you can drop a little red marker on it. I have Bitcoin highlighted, but some things that I really like to focus on are these 3 right here, GBP, JPY, so the pound versus the yen, the pound versus Canadian dollar, and then gold versus the US dollar. I do also trade Bitcoin, so that one right there. A really popular one though is USD JPY. And so that's the one I'm going to focus on right now on this call. But that's something you guys want to do. You just want to really start to understand when the market moves for each currency pair and just really focus on one at a time. If you guys, if you want to learn a way on how to really understand when the biggest movements are, first thing you got to understand that you got to trade currencies at a certain time of the day. You don't just trade any currency pair at any time of the day. There's times when you do actually want to trade it. That's like the 3rd or 4th video into the academy. If you guys haven't gone through the academy yet, by the way, and you've been in this over a month, like, you should go through the academy. You're only, hurting your, your chances of success in a faster form rather than you're just kind of delaying it by not going through the academy, guys. So one thing you could do though, to kind of understand how, currency pairs work when they move the biggest times of the day, if you go ahead and take a vertical tool right here. So I got a vertical tool right here, guys. So I'm going to go ahead and just drop it right here on August 10th. And so the market was closed. That's why it goes from August 7th. On the bottom here is where you can see the date. I'm going to drop it on August 7th as well. I'm going to drop it on August 6th. And what I'm doing, guys, I'm actually just dropping it a day apart. And I'll explain why I'm doing that here after I drop a few of them. But the reason why, we basically drop them a day apart from each other is because you want to basically figure out when the biggest movements are in, this currency pair. So we're on USD/JPY. If you look right here, where is the biggest movements usually? It looks like they're usually in the middle of the 24-hour period, this is USD/JPY. So usually right in the middle. You can see here in the middle, there's usually massive movements in the middle of all these days. And you got to understand, it's not the middle of your day, wherever you live. If you look in the bottom right corner, we trade in universal trading time. It's basically a time reference that the whole world can refer to. So right now in universal trading time, it's 20:55 right now. And so it just turned into a new day. That means every single day at 7 o'clock, basically universal trading time, it's a new day. So right here, guys, that means basically in 12 hours from now, it'll have a big movement. Because if the day just started and if it goes halfway through, this 12 hours is halfway through the day, that's when the big movements are, is when it's halfway through the day. And what's 12 hours from now right now, guys? That's the open of the US market. That's why there's a big movement. Every single morning, basically at 7, 8, 9 a.m. is when the biggest moves on USD/JPY are. And that's also because you could also trade this at nighttime too, because Japan's markets are opening right now. So it's a good time to trade USD/JPY as well. But that's why there's the biggest movements on USD/JPY right in the middle, is because this is when the US market's opening. And when the US market opens, or whatever currency pair you're trading, when that market opens, they're going to start putting a bunch of volume into the market. All the banks start trading, all the countries, cities, continents, they all start trading, exchanging money back and forth. And there's news being released about that currency pair. So if you go right here, this is called forexfactory.com, guys. News is released every single day, and you can see for what. But that has an impact on what's going to happen in the market, guys. So first things first, just understand, trade 1, 2, or 3 currency pairs. That's what you want to focus on. Just because of, Matty Pips or one of the professionals trades, 20, that doesn't mean you should go trade all 20, guys. You just want to focus on 1, 2, or 3. You can put a vertical line between the daily, every single day on whatever currency pair, and you can see where the biggest movements are. On USD/JPY, they're right in the middle of the 24-hour period on universal trading time down there. But yeah, guys, so hopefully that makes sense to you guys. That's something that was really huge to me. It made sense. I was like, okay, so you don't want to trade USD/JPY at 2, 3 in the afternoon. That's because the US market's not trading and Japan's market isn't trading at that time. You only want to trade it in the morning or at night, because that's when, like right now, like I said, that's when the Japanese markets are opening. So guys, that was one of the first things that I kind of learned, is don't try to trade everything. And once you get good at something, like a currency pair, stick with it. Stick with it. You just got to find, a lot of people want to trade everything. You want to trade everything you can just because it all looks cool. You want to touch every chart, place trades and everything. You don't really want to do that. You just basically want to find literally any single way on how to pull money out of the market. That's it. The goal is to just pull money out. That's the only goal. But that comes with studying and learning and all that stuff. So let me tell you guys a quote real quick, and then we're going to actually go into how to mark up charts. This is a quote that I heard. I joined this business 1.5 years ago. I heard it my first month and I never forgot it. I was like, wow. So if you are emotional while you're trading, it's because of a lack of experience and education. I'll say that one more time. So if you're emotional while you're trading, it's because of a lack of experience and education on your part. And so if you notice yourself, like, you're in a trade, you're like, come on. You're like, let's go. You're like, woo. And then all of a sudden it goes out of profit and you're like, woo, you're freaking out. You understand that's a lack of education and experience. So that's just something you want to catch yourself. There should be, try to have no emotions while trading. This is a system. You're trying to learn a strategy, implement a system, and start obviously back testing it, making sure it works, and trying to make some money, guys. So just remember that quote. Emotions are a crazy thing. Greed and fear, that's the only things that are going to mess you up in here. Greed of you didn't make enough money, or fear of, you don't want to take the loss that you took. So you keep trying to make it back and you just make it worse and worse and worse. This is really when it comes down to risk management, guys. So let's go ahead and start marking up a chart, guys. Right now I'm on the 1-day chart. You can see if I go to the 1-month chart, this started all the way back in 1994 is when you were able to start actually trading online. And so now using high-speed internet, it's 10,000 times easier. If you don't have fast internet, by the way, it can kind of make it a little difficult, obviously. Some of you might have already experienced that. So guys, the first thing that I like to do is I go to the 1-day chart, and you kind of got to realize that you want to look at this in a horizontal way. This is all about looking at it in a horizontal way, because this isn't like, the chart's bending and stuff. This is where it's hitting certain levels and then going back to other levels. And so history tends to repeat itself. So if you guys see here, you see here, price came up right here all the way back in January 8th. You can see in the bottom, January 8th of 2014, price came up to here and it stopped. And so if I go ahead and I just draw a resistance line right here, let's say right there, I'll draw a resistance line. You can see right here that, as price continued, it came up and it actually broke it in September of 2014 and then came back down and made a support right there. And so one thing you got to realize is these are just areas. A resistance where it's having trouble breaking this area, that's a resistance. It can also be a support as well. So if price were to get on top of that area, it can actually come down and now it can be supported right there. And so you'll get really good at identifying support and resistances very fast. All the stuff that I'm going to go over right now, although I may do it slow, that's because a lot of people are new. You'll be able to do it in about a minute or two. You'll be able to mark up charts very quickly. You'll see what I'm seeing very fast. Okay, guys. What's cool about that though is you see right there in 2014, it had that resistance. Same with 2014 right here. It made a support. If you keep following that line, look at all the other areas where, 2016, it hit right there, right here, guys, in 2018. There's several times that it actually hit this area. Right now, we're actually at that historical price right there, guys. And so that's right around 105, 106. And so history, tends to repeat itself. So always remember that. We're looking at this in a horizontal way. This is all horizontal. So what I'm going to do, guys, I'm going to go ahead and just start drawing some more support and resistances. So right here, I can see a resistance right here. And I can actually maybe make this a little bit bigger. Not quite yet. So I'm going to go ahead and just keep drawing ones that I see. One thing that I like to point out in the beginning, though, guys, is you want to just focus on where price is, because you're day trading. You're not year trading. So you don't really need to pay attention to anywhere. I'd say you don't really need to pay attention to anywhere up here. And that's because there's no way that this 1-day candlestick right here that we're on right now, there's no way that, I don't want to say no way, but it's pretty much impossible that in 1 day, it's going to go all the way to where it was in 2015. There's no way. So that's why you don't need to focus on this whole area. The price isn't going to be anywhere near that. So just don't even focus on it when you're drawing support and resistances. Same thing down here, guys. There's no way that in 1 day price is going to get anywhere down here where it was in 2012, 2013. So with that being said, the only place that we really want to focus on, guys, the only place that we really want to focus on, guys, would be right here in this middle area, because that's where price is. You want to focus on where price is horizontally. So that's all we're going to give our attention to. So I'm going to go ahead and keep marking up my charts, guys. So let's go ahead and keep adding support and resistances. So I'm going to click the horizontal line. Let's go look for some more. So right here, guys, I'm just going to start plopping them down. And, these are just general lines. It's not like a specific, thing that I'm going to touch. I'm just drawing general ones. So, as I get closer and closer, I'll be able to see them a little bit better. So right here, guys, I'm just basically looking for anywhere where it's having trouble breaking or where it's supporting. And so as we kind of get closer, you can start to see these areas. Here's a support right here. I'll draw it right there. Type some ones in the chat if this is making sense so far, guys. If you're understanding what's going on for the most part right now, guys. I just want to make sure you guys are following. See, I told you this is where it actually is very basic. I'm just starting with really basic stuff. How to do SRTs, support, resistance, trend lines, and then we'll kind of dive into a little bit more advanced stuff, guys. So let me kind of get a little bit closer. Let me move over a little bit. So you can see I'm starting to zoom in, guys. And so you want to know what's absolutely crazy? Look at this. So this is USD JPY right here. This is when I joined right here. This big drop that you see right there, guys. It was this big red wick. That was basically pretty much New Year's, and that's when I joined. So I've watched this whole trend come about this entire time, guys. And what's crazy is looking at what happened during the coronavirus. Like, look at that. That's absolutely insane. That's so much movement. And it's so artificial, and I don't even want to get into it, how they made it go back up like that by obviously bailing out and printing a lot of money. But crazy what coronavirus did, guys. If you were looking at news as it was dropping during the coronavirus, it was nuts. It was I was telling a few people on this call right now what unemployment was like when it was dropping. I think it's Sean and Angela. There's some new members on the team. But yeah, I was basically explaining how unemployment was just unreal, looking at the numbers when obviously March and that time was happening. So guys, as I'm getting closer right now though, right now I'm just kind of focusing on this area. You can start to see how these are really actually pretty accurate. It's right on these specific areas. And so as you kind of get closer, what we're going to do right now is we're going to go ahead and I'm going to place a couple more. We're going to go ahead and go to the 1 or 2 hour chart. So you start on the 1 day chart because you're trying to see the bigger picture of everything. And then we'll go to the 1 or 2 hour because we're getting closer. And then eventually we'll go to the half hour, 15 minute, closer and closer and closer, all the way till we get right up to where price is at this second. So let's go to the 2 hour right now. And I'll go ahead and zoom out and just kind of check out what's going on. So what I'm going to do is you can kind of get a little more support and resistances drawn. You can actually draw a little bit more now that you're a little bit closer. You guys see how like this resistance area, it's kind of scattered, some resistance was here, some was there, that's why you can actually, sometimes I use the rectangle and you can literally just say, okay, so this entire area would be a resistance area. That's why sometimes I use the rectangle, because it's not necessarily just a pinpoint line of where resistance is. It's not necessarily just a pinpoint line. But yeah, guys, so let's go ahead and continue. So what we're going to do right now is we're going to actually start doing trend lines, guys. So I just drew a couple support, resistance, trend lines, or support and resistances. We're going to move on to how to draw a trend line. And so does anybody right now not really understand what a support and a resistance is? It's just an area where, like, for example, right here, it's having trouble breaking here, 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 and here. So I know I can draw a line right there. It's having difficulties breaking that area, guys. That's why I'm able to draw that and stuff. So let's go ahead and let's draw this. Let's go ahead and draw a, let me check out the chat. Do you draw the line at the top of the wick or the candle? It depends on where majority of them are. So for an example, looking at all these, I could have, if I get real close, I could have, I'll actually zoom in for you guys. I could have, placed it, you could have placed one right there, but not very many candles reach that area. You could have placed it at the top of, these two, which is kind of this one and right here. But again, not very many reach there. Or you could start to bring it down a little bit, and you'll start to touch, you see how it's kind of this area, right here, it had resistance, but it's down here, right there it did as well. And at the top of that, that's where a rectangle comes into play, when you can actually draw it relatively like that. So that whole area is an area of resistance in my eyes. That's how I would look at it. By the way, guys, the little thing following my mouse, that's called crosshairs. The things that are following it, super important. They help you look super far left or super far right, up or down, without having to move your mouse all the way over there. So that's why I'm able to drop a rectangle way over here and have it line up perfectly over here, guys. So that's just another tool that we obviously use. Good question. Learning a lot. Awesome, guys. Yeah, feel free to fire off questions in the chat, though, guys. I know we're kind of going, but let's go ahead and let's do some trend lines, okay? One thing, too, you guys see how it's all weird right now? Like, I stretched out the candles on the right side, all these numbers right here. I'm just stretching out. I'm stretching out the data, pretty much, just the candles. If you ever, like, have troubles trying to fix that, just right-click and hit Reset Chart. It'll just reset the chart, right? It'll just snap it right back to it. So let's go ahead and let's do some trend lines right now, guys. The trend on USDJPY is looking a little weird. Usually I'd use a different currency pair, but for the time being, this will be fine. What I'm going to do though is I'm actually going to go back in time, and I'm going to use these areas as an example on how to draw a trend line. Okay, so you guys can kind of see. I'm actually going to go to the 3-hour chart just so we can see it a little bit more in depth. Let's see a question real quick. How many points do you want to hit when drawing a trend? At least 3 points. So let's go ahead and let's draw a trend, guys. So what a trend is, first off, you got to figure out, is the market going up? Is it uptrending or is it a downtrend? So that's the first thing. Very simple to identify that. If we focus, let's focus on this downtrend right now. Okay, guys, let's focus on this downtrend. Yes, bearish or bullish, exactly. Bearish, bears go down, so that's what down means. Bulls ram up. That's why they call it bulls. So it's a bull versus a bear market. So guys, right here, we're going to focus on this black line right here. It's a downtrend. So we're going to go ahead and draw a trend line for it. So what you do when you draw a trend line, guys, basically you grab the trend line tool, and what you want to do is it's going to be like a funnel. All the candlesticks are going to be in this funnel, either going up or down, obviously. So what you do when you're doing a downtrend one, first off, let's do the top of it. So you're going to go to the far left most top candlestick, and you're going to start the trend. So right here, guys, for an example, you would go to the far left most top candlestick, and you could say right there, relatively. But you can kind of see, guys, this is where the trend kind of was. I'm actually going to place it a little bit below and mark up around like right about there. It's that's kind of where I'm gonna put mine. I'd say right about here. But yeah, guys, so that would, in my eyes, be the top of this trend right here. And you got to have 3 areas touch at least. You got to at least have 3 areas touch. So if we look right here, and then we got this little arrow. There's one area. There's another. It's 2. There's 3. There's 4. This would be considered 5, 6. Roughly. But that's kind of what you want. You want to at least have 3 points touching, so it's relatively accurate. That's kind of why. So let's go ahead and let's draw the bottom part now, guys. So now what you do is basically you go to the far leftmost bottom candlestick. All right, so yeah, far leftmost bottom candlestick. So I'd say you could do this one right here, but if you look, this doesn't really line up that well with the chart. I mean, it doesn't really fit that well. Excuse me. In my opinion, it just doesn't really fit that well. It can't really touch that many areas. It only touches 1 or 2. So what you got to realize is, okay, maybe there's a better point. Now look at this, far leftmost top candlestick, let's say right here. Now, if you look at that, it actually starts to line up a lot better, guys. You can see that this is starting to actually have a way better fitment. And you can see, so here's 1 area, 2 area, and 3/4 areas that it's touching. So guys, right here, you can see it's kind of in this funnel. You can see it interact a lot. So look at this. It had this resistance right here, and it hit the resistance, and then here's the start of the trend. It starts to fall, and it breaks through the support, and it keeps coming down, and then it hits this trend line and support right here. This is the support, and it also hit this trend line right here. So that caused it to start going back up. It came up, hit our trend line, came back down, broke through the support. And you can see, guys, every single time that it comes back down, it's forming a new support or resistance. And so it just keeps breaking these levels. So it came down, hit our trend line, and we obviously could draw a support right there as well. But it kind of basically stays inside of it. It doesn't mean it will 100%. It can easily break it. However, this is just, obviously for you to look for entries pretty much when you're trying to actually trade, guys. One thing I want to kind of show you about a trend line, though, is, what happens when the trend breaks? What happens when it starts doing this and it forms a whole new trend, guys? Pretty much what you do is just literally delete the old trend. Doesn't even matter anymore. It's useless. That trend's broken. The only thing you want to always keep is the support, resistance, and the support and resistances that I have drawn right now, guys. That's pretty much the only thing that you actually want to keep on the chart at all times. So what you do when a new one's formed, let's say it's going up now, far leftmost bottom candlestick. I like to use this one as an example a lot. Most people, when I say far leftmost bottom candlestick, they would go choose this one right here, far leftmost bottom one. But same thing, it doesn't really touch any of the lines. It doesn't fit that well. And so what I like to call this big random red candlestick, it's called a liquidity grab. That's what it's called, but we're not going to get that advanced yet. What that is, I call it an outlier. It's just sticking out. You guys know what an outlier is, obviously. If you don't, but I'll educate you real quick. An outlier is like if you have the numbers 1, 2, 3, 4, and then like 70. 70 would be the outlier. It doesn't, it's way different than the other things you're comparing. So this one I call an outlier. I wouldn't use that one because it's called a liquidity grab. It's basically the banks trying to screw people over. So let's go to the far leftmost bottom candlestick. Let's say this one right here. And now you can see this is going to fit a little bit better. And, we could put it right here. So this is touching 1 area, almost 2. So this would be 3, 4 areas. But if we drag it in just a little bit more, you can actually hit tons of areas, and it fits really well, guys. So right here, this is where I would have drawn it back in the day when this trend was here. You got to remember, though, when I'm drawing these trends in the past, I'm pretending none of this stuff exists because I'm pretending we're in the past right now, guys. So yeah, that would be the bottom of the trend right there, guys. You just go to the far leftmost bottom candlestick, and you have to have at least 3 areas touch. You'll get better at placing it as time goes on. And like I said, you'll be able to do this stuff really quickly, really fast. And so let's go ahead and do the top part. So now this is the far leftmost top candlestick. A lot of people would be like, all right, well, right here, far leftmost top. But again, that doesn't really fit that well. Let me go ahead and actually, I'm going to increase the thickness on these so you guys can see it a little bit better. But yeah, guys, that doesn't really fit that well. I mean, look at that. It doesn't touch any of these areas. So what you want to do is find where it actually fits the best. So my far leftmost top candlestick, I would say would be right here. This is where I would say, because you can see it kind of fits the trend. You guys look at this. It literally goes back to those candlesticks back here as well. And so this is kind of where I would place mine, roughly right there, guys. And so this, again, this is just, you know, does anybody know, like, or does anybody not know why we're drawing these though? This is simply to look for areas of entry. You know, it's to literally, you know, if we see, you know, since this is the trend line and it hit this area, we know that if it ever comes back up to this blue line, because we drew this trend line, that it's most likely going to have resistance and eventually come back down. That's how we're drawing it. We're trying to predict which way is the market going to go by using, this is called technical analysis. This is just strictly drawing on the charts. Some people like technical analysis a lot. Some people hate it. It really just comes down to you. I use both. I use technical analysis, and fundamental analysis is Forex Factory. And so right here, guys, this is fundamental analysis. You're using what is going to happen to the markets based off the numbers, the news results, you know, other things like that, guys. This is technical though. Yeah, guys, that is how you draw a trend line just in general. You know, you go to the far leftmost bottom candlestick, I'd say right there, and you have to make it a nice fitment pretty much. The reason why I went back though is because if you look right here, guys, there's not the prettiest trend line being formed right now. And sometimes there really isn't a trend. Let's say that the old trend just got broken. You know, there hasn't been a new trend made yet, but you guys can see right here, there is kind of a weird little trend. This one's going to be interesting, but it's kind of looking like this, more so or less. This is kind of the trend that I'm seeing right now, but it's definitely a weird looking trend. And you can also see it right there. This is kind of the trend I'm seeing right now. Again, that's not a very strong trend. It could break it very easily. This is just kind of what I'm seeing. You see how it's starting to come to this close though, this little closing area. That's when it's going to have to make a move though. And it's going to either alter what the trend looks like or, you know, so on. You could also place a trend. I mean, if you wanted to, you could kind of go like that. You could place this one right here. That's another area you could kind of look at it. That's why, you know, when you're looking at it on a bigger time frame, it's easier to identify a trend line. When you're on like the 5-minute chart, 5-minute candlesticks are moving everywhere so much. They're moving all the time. It's difficult to actually find a strong trend line. So we make trend lines, technical analysis, then we get the fundamentals to compare them with the news. Yes and no. Sometimes there's not any news for that currency that day. Sometimes there's not. So you don't really have any fundamental analysis. But yeah, in the essence, so you use technical analysis and you mark up your charts, support, resistance, trend lines. It's just called SRTs. Very, very simple. You'll learn that in the academy more. SRTs though, and then you can use fundamental analysis, which, you know, let's say the US dollar drops the United States drops their unemployment, and it's based off this trend line. You know, it should go down right now. You know, based off the trend line, it should, you know, resist and go down. But what if the, you know, unemployment dropped and then it was really good? Actually, like tons of people are not unemployed right now. That's good for the US dollar. That could cause it to reverse and come right back up and actually break through it. And so that's why, you know, it's important to analyze both of them and just kind of understand how they both work, guys. So that right there, though, that's how you mark up charts. Some people, they literally do not use any sort of indicators. You guys obviously know what indicators are. They kind of look like this. There's the Bollinger Band. There is, it's actually, get rid of this volume bar. There's the Bollinger Band. There's the parabolic SAR dots right here. There's the middle Bollinger Band, the red one, the blue one. There's also sometimes buy and sell arrows on the bottom. This is the stochastic, the RSI, and the DMI. And so all this stuff really is, guys, it's just all the lines you see, the ones that just popped up. I'll go ahead and remove them real quick and I'll re-add them. All the ones you just saw pop up, those are basically all just averages. That's it. They're just taking the average of what happened in that 5-minute candle, 3-minute candle, hour candle, or so on. One thing I'll say is if you ever are using indicators, you only want to use them on like the 5, 15, and 3 minute. You don't want to use them on the hour. These strategies, they're made for the 5, 15, and 3 minute. That's really what they're made for, guys. On this call, I'm probably not going to go over the how indicators work, because Maddie Pips is going to do that tonight at 10 o'clock, guys. I'm just going over how SRTs work, guys. So that right there, though, I think I gave you guys, a decent amount of just basics on how to mark up charts. When you get to the 15 minute, because now we were on the 1 to 4 hours, somewhere in there. Once you mark up your charts, you do your trend line, then you can hop to the 5 and the 15 minute. And that's where you can really see in detail all the candles interacting. You can see right here, there is a resistance, and there is also another resistance right in this area. And that's kind of where we're at right now. If it were to break these, if it gets below this candlestick right here, it's most likely going to come to probably this area right here, or continue all the way down to here. Because like I said, if it breaks a level, it's going to the next level. Sometimes it fakes you out though. Right here, you see this big blue candlestick on the top. A lot of people in the world, when they saw that go, whoo, they all thought, okay, USD JPY is definitely going to this next area. But there's things called fake outs, which is where, the banks push the currency up. They basically, what they did was they increased the value of the US dollar. And that's why it went up right here. But basically, they increased it. And then tons of people in the world got into buy positions. And then what the bank said was they basically decreased the value of the US dollar by selling it off. And boom, they hit all their stop losses, took all their money. And so your goal is to be in the less popular crowd. That's what you want to be in. You want to be in the less popular crowd, because the banks and, the banks, I'll just say the banks. The banks can see how many people in the world are in a buy position for this currency or whatever currency, and how many people are in a sell position. And they're just going to do the exact opposite. So if you're in the less popular area, you're going to make money with the banks. That's how it works. If you're making money, that's because someone else is losing money, whether it's a bank, other trader, most likely a bank. That's who actually moves the market around. We as retail traders, that's what we are. We have literally no impact on this market. We can't even move it at all. We're using such small amounts of money. This is $6 trillion every day of volume that goes through the market. And so what I'm going to do right now, guys, I just gave you some basics. If you've been on the team for over a month, I want you to drop some ones in the chat real quick. All right. How did you get the Maddie Pips indicators? You don't want to know that. Where can people view this video if they weren't able to hop on? I'm going to put it on YouTube, actually. Back in the day, Maddie Pips didn't have a strategy. This is just, I've been trading with him for the last year and a half. And so I was actually able to there. So there's only 5 people right now that have been in the business, 6 people that have been in the business for over a month that are on this call right now, roughly. What I'm going to do, guys, is I'm going to start to step it up a little bit. I'm going to increase the, kind of bring it to the intermediate area. I'm kind of already touching in there. Let's go intermediate though. Let's get a little more in depth, guys. So let me reset this chart. So we drew our support resistance trend lines. Again, you'll get way better at that as you just practice it. Just pull open any currency pair. Doesn't even matter, and just start marking it up. That's all you got to do. That's really all I did to actually learn. Just did it over and over and over and over. So what we're going to do right now, guys, is I'm going to kind of dive into more about fundamental analysis and stuff. I want to explain something. So this chart, USD JPY, all this is this is comparing one US dollar is worth right now in the red. You can see right here on the right side, 105.792 Japanese yen. That's what this means. And so it's just comparing one US dollar is worth how many yen. That's how every currency pair works. So, right here, let's click on this one. This is gold. XAU USD, 1 ounce of gold is worth how many US dollars? Bitcoin, 1 Bitcoin is worth how many US dollars? Euro USD, 1 euro is worth how many US dollars? Literally all this stuff. 1 pound is worth how many Japanese yen? That's how all these work, guys. It's crucial to know 2 things. One, these won't ever flip-flop. They'll never go JPY USD. There is a JPY USD. You can look it up on TradingView, but you'll never be trading that. The dominant currency is always first. So the dominant currency is always first. And so US dollar would be the dominant one with Japanese yen. So that's the first thing you always want to know. The next thing you want to know is that if you can understand, if the US dollar, for an example, were to gain value, that would make this chart go up, because it's going to take, if US dollar goes up in value, it's going to require more yen to equal a US dollar, because the US dollar just rose in value. So it's going to take more yen to equal a US dollar. If the US dollar loses value, it'll take less yen to equal a US dollar. It's not worth as much. Same with the Japanese yen. If the Japanese yen loses value, it's going to basically take more yen to equal a US dollar, because it's worth less now. Vice versa, if the Japanese yen gains value, it's going to take less yen to equal a US dollar. So basically, guys, what the first thing I want to dive into is currency strength meter, okay? This is something that you want to refresh every, I'd say 5 minutes, because it's constantly changing. And so for an example, right now, guys, US dollar is way, way weaker than the Japanese yen. If you don't know what this is a visual representation of which currencies are gaining strength and which currencies are losing strength. And so right here, guys, the US dollar right now is technically losing value. That's what this says. As of right now, it's losing value. The Japanese yen is gaining value technically, because it's, you know, it's this midway point, you know, when it's only like red, orange, and yellow, that's kind of just stagnant. That's consolidation. It's just kind of not moving. Consolidating means it's just kind of not moving, guys. So right here, since the US dollar is weaker than Japanese yen, I'm gonna show you guys something. How you read this and use it as a tool is kind of like this. If the first currency in the pair is stronger, the chart's most likely going up on like the 5 or 15 minute. If the second currency is stronger in the pair, the chart's most likely going down. So I'll say that one more time. If the first currency in the pair is stronger than the second currency, the chart's most likely going up. If the second currency is stronger in the pair, the chart's most likely going down. And so that's something really crucial. You don't really want to trade against that. You want to trade with it. You want to trade with it. So since the US dollar is weaker than the Japanese yen, the chart's most likely going down. You want to be looking for sell positions, technically. That's technically what you want to be looking for. So let's go see if the chart's actually going down right now. It's USD JPY. Let's go on the 5 minute. And if we go to the 5 minute, you guys can see right now that it's starting to fall. You guys see it's on this downward trend. And so that's how you can use this. It's going to let you know, okay, so the New Zealand dollar is way weaker than the Japanese yen. NZD JPY is probably going down too. I don't think I have the one on here, but let's just go freestyle it. NZD JPY. Let's click on it. And let me go click on it right here. You can see it's also going down. And so that's kind of something that you can just pay attention to when using the currency strength meter. Hopefully that makes sense to you guys. This is really important right here. The currency strength meter is a huge thing that we use a lot. There is some other ones. There's like currency quake or something like that. And I heard that one works a little bit better. I haven't actually got my hands on it yet. If someone wants to drop it in the chat, feel free to. Otherwise, it doesn't matter too much, guys. So that right there is currency strength meter. Now let's dive into forexfactory.com, guys. Okay, I want to dive into forexfactory.com. What is this? You know, this is the only news website that you need to use. That's it. Don't go on the TV to get your news. It's not going to help you trading. What you really want to do is hop on here, and you can see Sunday, not really much. It's a bank holiday. You know, no one was really trading today. The market's just open. By the way, on Sundays, you can see there's a break in the trend. Where is it? It would be today. It would be right around here. So you guys can see right here, though, there's a break in the trend right here in this area. You guys see this break in the trend right here? Oh, you guys see this break in the trend right here? That's a little break right there. And that's because Friday at 4 p.m., the market closed 4 p.m. Central Standard Time. And then, boom, it reopened down here Sunday at 4 p.m. And so I do not like trading stocks because there's a break in the trend every single day. Every single day there's a break in the trend. It opens at 8:30 a.m. Central Standard Time, closes at 3. And so every day at 3 o'clock, boom, the market closes, the trend stops, the chart doesn't move anymore until 8:30 the next day. Boom, it opens back up. That would be 9:30 to 4 o'clock for Eastern time, by the way. And you guys can do the conversion for other time zones as well. So that's why I just like currencies more. This market's going 24 hours a day, 5 days a week. And so it's not going to break the trend every single day, guys. So let's go to this news website. Let's say tomorrow, right? Tomorrow's Monday. Let's look what's dropping. The only thing you want to pay attention to is the red folders. These are all yellow, so low impact expected. Not really too important. Doesn't really matter. What time is it right now? 7:54. Cool. So we've been going for about 54 minutes or so. But let me go ahead and hit this next one. So there's no red folders, so you don't really need to pay attention to anything. Red folders are a high impact expected. That's why we pay attention to it. So you can see here tomorrow, if you trade NZD USD, if you trade NZD JPY or anything with NZD in it, You want to pay attention to these news releases, because when these release, there could be a high impact expected to happen on the New Zealand dollar. So NZD-JPY, if this was all good news that got released, that would cause NZD-JPY to go up. That's because it would make NZD gain value. If it was bad news, the chart would probably go down. NZD-USD, if it was good news for NZD, the chart would most likely go up. Vice versa, if it was bad news, it would go down. That's how you kind of use this, guys. So let's go ahead and let's go to Tuesday right here. So the consumer price index is dropping for the US dollar at 7:30 a.m. One thing you guys want to realize, this is Eastern time. So for us, that would be 6:30 a.m. for us in Central Standard Time. So 6:30 a.m. for Central Standard Time, because New York gets all the news first. They get all the news first in the entire country. This Forex Factory is actually based out of New York. That's why they get the news so quick. So guys, a couple things about this. On the right side, there's a folder, and you can click it, and it basically breaks down what it is that you're looking at. It also shows, okay, here let me make this a little bit bigger. It shows these are the actual results. None of them have dropped yet because this is coming for Tuesday. And here's the forecasted results, what they think is going to drop. It's like forecasting the weather. What do they think is it going to be like? And so that right there is the comparison. If it's a good news release, which means that it did better than the forecasted result, it'll be in the color green, kind of like this is right here. This was July of last month. It was better. It was better than the forecasted result. The way you read this is you look right here. What does it measure? So this is the change in the price of goods and services purchased by consumers. So we're back in econ class, guys, but at least we're actually trying to make some money though, rather than trying to pass the test. So right here, guys, this is the change in the price of goods and services purchased by consumers. And so the way you read this is if the actual result is greater than the forecasted result, it's good for the currency. And so if the actual result is greater than the forecasted result, it's going to increase the value of the US dollar most likely. That's the usual effect. And so basically, it's just got to be higher than 0.3%. So if it's higher than 0.3%, that's good for the currency, and it's going to make USD JPY go up. It's going to make USD CAD go up. Anything with US dollar first is going to go up. If US dollar is second, Euro USD, it's going to make it go down. You know, it's going to, because it's basically going to take less US dollar to equal the euro. Let me give you guys an example of a news release that I use. Some of you guys might have seen this before, but I use it though because it's just such a good example. So right here, guys, on October 2nd of 2019, there was actually there was a crude oil inventory, is also a non-farmer employment change, a non-farm employment change. So we're going to focus on this crude oil, okay? Oil is huge in the United States. You know, whether you like it or not, it's tons of, you know, the revenue for our country and stuff. So basically it's something that you can, you know, use towards trading. With oil, let's go ahead and click on this. Let's pretend this didn't drop. What I would notice right away if I was looking at this, I'd look, okay, so the last 2 weeks, because this drops every single week, the last 2 weeks, it looks like there's been a surplus of oil. Let's actually look what this is first. This measures crude oil inventories. This measures the change in the number of barrels of oil held in inventory by commercial firms in the past week. You guys have probably worked somewhere, maybe retail or something, you know, in the back room where there's inventory, you can only fit so much inventory. You literally can't fit there's a certain amount you can fit. And if you have too much, you got to basically sell the stuff for cheaper just to get rid of it, because you're not pushing the stuff and or the products or whatever it is, and you got to get rid of it. So if you look right here, September 18th, they had 1.1 million barrels of oil on hand that they wanted to get rid of, that they haven't gotten rid of, sitting in inventory. And so they expected it actually that they were going to need oil. That's what they expected. So that's red. They have extra oil on hand. That means we're losing value because we're not selling it. The next week, even more, 2.4 million barrels of oil. And so you can see it's increasing. So that could have kind of given you an idea. You see right here, we are in need of oil, in need a little less, still in need of oil. Now we have extra on hand. So when this dropped 3.1 million barrels of oil, they thought we were only going to have 2 million. That was bad for the currency. The US dollar lost value that day. And so one thing you can do, guys, just with news, is if you click more and you scroll down here, you can see what it was last September. So you can go compare on a yearly basis. What is it? So right in September, usually we're in need of oil. You know, it's usually, we usually do pretty fine around here. You can go to the September before that. You can really check over and over and over. So this one, it looks like we had extra oil on hand. That's how you can kind of cross-reference it. However, with the coronavirus, be really careful doing that, because this year has been crazy data. It's a really not a good thing to like compare to old data. You know what I mean? Like this year's all results are just crazy. Like for an example, consumer spending goes up like crazy around the holidays, around, you know, Christmas time, goes up like crazy. Tons of people start spending money. And then right after, you know, the holidays, New Year's comes, now all the holidays are done. People have no money because they just spent it all on presents and, you know, whatever, you know, vacations and stuff. So unemployment starts to go down because people, you know, basically got to go get a job. They got to go start making some money. So unemployment starts to go down right after New Year's. This happens every single year. Consumer spending goes up, unemployment goes down right after New Year's. And so that's something you can pay attention to, guys. I want to show you what happened though to this US dollar. What happened this day when this was released. So let's go ahead. I'll even do USD JPY. I'm going to remove everything off of the chart real quick. And I'm going to go to, let's go to the 4-hour chart. So where is it? October 2nd. So we'll come right into here. So you guys can kind of see right here. There it is. Let me drop a line. So guys, this is what happened when it dropped. When that news release dropped, when it said we have tons of oil on hand, so the US dollar is losing value. Look at this. Just fell like crazy over the next couple of days, you know, all the way to like around October 4th. Just massive drop in the market on USD JPY. It was not just USD JPY. You could go to USD CAD and you could go to October 2nd. You know, you could zoom out and go check out what was going on October 2nd, and you'll see that it was also another big drop. Where would it be? I think it was right here. This is kind of the drop that they saw. It had this overall downtrend basically, but that's kind of what happens, guys. You could look at, you know, let's say Euro USD, where USD is the second currency. So let's go to Euro USD. Right here, if we zoom out and you go all the way to it, you can see that on October 2nd last year, we're way past it. You can see that this probably went up. You guys see this right here? Instead of going down, the whole market went up. And that's because the US dollar is the second currency. Since the US dollar basically lost a ton of value, that caused USD JPY, USD CAD, anything with USD first to go down, because now it takes less of whatever to equal the US dollar. The US dollar lost value. Euro USD, it went up because now it's going to take more US dollar to equal euro because the US dollar lost value. So when you start to understand these correlations, guys, it's absolutely crazy. You know, you'll start to be able to be like, okay, since the US dollar is losing value, you can take multiple positions. Let's say the US dollar loses value, you take a buy position on Euro USD and you take a sell position on USD CAD, because you know they're gonna be opposites. That's kind of how you can start to play it when you understand how fundamentals work. Just simply, is it going to gain or lose value based off a news result? That's really what it is, guys. So yeah, guys, hopefully Forex Factory currency strength meter is all making sense. I know that that's where you kind of get a little more advanced. We're not just marking up stuff on the chart. We're talking about fundamentals. And so one thing I'll tell you guys a little bit about Bitcoin. How about that? Everyone always wonders about it. I've traded a lot of cryptocurrency in my day. Second currency going up stronger. If the second currency is stronger, the chart's most likely going down. If the first currency is stronger, it's most likely going up. So guys, you ready for some cryptocurrency? This stuff's fun. I really like talking about cryptocurrency. So let's go to Bitcoin. First of all, I want to show you guys something cool. If you look at gold, silver, and Bitcoin. So silver is XAG USD, gold is XAU USD, and Bitcoin is BTC USD. If you look at it, guys, they basically all do the same thing. Like, look at this. I mean, obviously you can see here that gold and silver, they correlate very heavily. This is gold and silver. They correlate extremely heavily. If the US dollar loses value, gold goes up. Gold's at an all-time high right now. It's absolutely crazy. You have an ounce of gold that's worth $2,033. And that's why, you know, you don't want to hold your money in US dollar, because on average, the US dollar loses 2% value every single year. And so we were literally like, we've been getting robbed purchasing power for so long. They're printing money, which makes us have to spend more money on products because it's not worth as much every time they print. And so when they print more money, the US dollar loses value, it causes gold to go up. Gold is also, it's a limited supply. And so that's why, you know, gold, silver, Bitcoin, in my opinion, they're all appreciating assets. You could hold your money in it. And if you look at this, you would already be up. If you held, you know, I don't know, 10 to 25% of your entire net worth in gold, it literally went up 25%, like in basically this year pretty much already. Like that's absolutely crazy. Your whole 10 to 25% of your net worth that's held in gold would have just increased. If you owned an ounce and a half gold chain, it would be worth more. You literally just would have had your neck go up in price. So that's what's pretty sick, guys. But you know, obviously, silver is an insanely valuable asset too. It's used in tons of technologies, tons of tools, and it's only worth $28. And so that's why, you know, I'm a big fan of silver. It's extremely undervalued. Bitcoin, let's get into that though. I know that's what a lot of people want to focus on, guys. And so Bitcoin is ran by something called blockchain. All it is just basically, it's an automatic ledger. If you don't know what a ledger is what banks have. It's like they keep track of who owes what, who owns what, who gave who what. That's what a ledger is. They're just keeping track of everything. What Bitcoin is, it's an automated ledger. That's what it is. And so we all basically control Bitcoin together. Like it's decentralized. No one controls it or has say over it or anything. It's a decentralized network. A bank is centralized. They basically have say over stuff. You know, they control everything. Banks, it's a straight monopoly. And so that's why Bitcoin, banks don't like it because they don't have control over it. They can't leverage it and stuff like that. Recently though, banks have been buying tons of Bitcoin, just massive amounts of Bitcoin. And it's because they're starting to realize, wow, this is actually going to be worth a ton of money, guys. You don't need to buy $11,778 worth of Bitcoin in order to buy Bitcoin. You could buy $10 worth and then you're invested in Bitcoin right on Cash App or Coinbase. Same way we fund our brokers. And so I want to explain to you guys, why is it worth $11,787? Let's go to coinmarketcap.com. So guys, coinmarketcap.com right here. Let's click on Bitcoin. This is just the top 100 cryptocurrencies. So right now, guys, one Bitcoin, like I said, is worth $11,742.68. Why is it worth that though? You know, and I'm going to explain why other currencies, cryptocurrencies, can't get to this price. It's like literally impossible. So the reason why it's worth that, guys, two things. It's just how much supply is there, and then basically how much is it worth. So right now, guys, there is $216 billion invested into Bitcoin. That's how much money has been spent on Bitcoin and people own Bitcoin basically. Right now, there's only 18,456,000,000 Bitcoin out there. In total, eventually, there's only going to be 21 million. You see that? Like, imagine if the US dollar, they're like, there's this much and that's it. That would be awesome. You know, that would be awesome. But obviously, that's not how it's going to be, guys, though. So there's a limited supply of Bitcoin. One day, a Bitcoin could be worth $250,000. It could be worth, you know, a house. We have no clue. You can literally send the tiniest percentages of Bitcoin to people. I think it's massively undervalued right now. So guys, look, 216 billion. So what I'm going to do is I'm going to go ahead and pull up on this calculator real quick. All right. Oops, my bad. I don't even know where that went. Let's exit out of that. Let's go. Let me open this up real quick. All right. So if I open up this calculator, guys, let's do this. This is why Bitcoin's worth what it's worth. Okay, so 216,726,059,240 divided by how much money or how many Bitcoin are there right now? 18,456. So let's do that. 18,456,268 equals $11,742.68 a coin. That's why it's worth what it's worth. So it's just how much money has been invested in Bitcoin, 216 billion right now, divided by how many are there out there right now. That's all it is right there. And so some people think, you know, Bitcoin could get to, I don't know, $100,000. And I totally agree with that. I 100% do. However, it's super volatile. Everyone thinks how much is a Bitcoin worth in US dollar? Because that's all everyone knows is US dollar. That's all everyone knows. And so I just, you know, I'm focusing on just owning chunks of Bitcoin. That's what I do. Just accumulating it. yeah, guys, that's something. When I found that out, why is Bitcoin worth $11,000? I was like, wow, that's crazy. Now I understand why it's worth, $11,000. Let me explain something to you guys real quick. If you come back here, let's look at some of these other coins. You see something that's worth like, let's see, like, let's do Ripple, 29 cents. You're like, dude, what if that got to $12,000? Oh my gosh, that's 29 cents. How many times over is that? It's ridiculous. Let me explain why that can't happen, guys. If you look at the supply of Ripple, there's literally going to be 99, looks like 99 billion Ripple. That's why it can't get there. In order for Ripple to even get to $1, there needs to be $99 billion invested into Ripple, and then it'll be worth $1. It'll be 99 billion divided by 99 billion. That's basically kind of how it would be. That's once all of it's made. Right now, there's only how many out there right now? 44 billion. So if this $13 billion market cap for Ripple can get to 44 billion, it'll be worth $1. It almost got to $1 actually when crypto went on that big run. But yeah, that's why, if you do the math in your head, there's no way this can get to $20,000 a coin. It would have to be, even to get to $20, it would have to be 20 times bigger than that amount right there. So 44 billion Ripple, it would have to be 44 billion times 20 for it to get to $20 a coin. That's why, some people just don't understand, when they go invest into something that's only worth, $13, like, oh, but dude, that could go to $20,000. And they're like, let's go. There are some coins that have similar amounts, just like Bitcoin and stuff. And sometimes people get really lucky. Out of the thousands of coins out there, sometimes people buy, they're just random coins, and it'll go up 3,000% over the night because it was worth 0.00000 like 2 cents. And then they'll buy like $1,000 worth, and all of a sudden it'll shoot up 3,000%. It'll go to like 2 pennies or something. And, you can get really wealthy from that. But it's greasy. You don't want to do that. But yeah, guys, hopefully that makes sense. When I found out about Bitcoin, why it's worth what it's worth, it really changed my whole perspective on Bitcoin, guys. I know it was already asked already, but where is this video going to be posted? We're going to post it on the United Traders YouTube channel, guys. There is another video on there. That's where we post any of these kind of videos and stuff like that, guys. So does anybody have any last questions just in general about anything we kind of went over today? We went over support, resistance, trend lines, just how to mark up a chart. You'll be able to do it very fast once you just go through the academy, put a little bit of effort into it, take some notes, learn. And then, obviously we went through currency strength meter. We went through Forex Factory, looking at news and stuff and kind of how that correlates, and a little bit about cryptocurrency, guys. So my advice for you guys would be 2 things. 1, we have the overview coming up in 50 minutes. Just think to yourself, do you have anybody who would want to get into trading? Nobody knows how to trade. 1% of the world actually invests. Think about that. Put your homies on. That's how I look at it. Put your friends on. That's kind of what I do, guys. I want people to get into investing and stuff, guys. Yeah, just in general, out of the 35 people, type some 7s in the chat if you thought you learned something on this call that was, beneficial for you guys. Type some 7s in here, just if you learned something that helped you out, guys. Awesome. I'm glad I was able to help some of you guys on this call, just kind of learn a little bit extra. I do these calls every once in a while, guys. I'm not an educator, nothing like that. I just like to, kind of teach some things that, I know for the most basics to up to the advanced, guys. So if you got any questions, though, feel free to reach out to me. I'll put this on the United Traders channel. Invite some people to the 9 o'clock overview. I'm going to crush that thing with Joey Wilson, guys. We're going to show them how trading works. It's a great time, a lot of fun. If you need any help, though, in terms of anything, whether it's building the business or trading or any of that kind of stuff, reach out to me, other leaders on the team. Jake Bloomstrand is going to hold a call soon too, where he's going to do a chart session. And also, guys, 10 o'clock tonight, hop on Matty Pip's training session. That is going to be very beneficial. He's going to go over the basics of the broker, how trading works, and all that stuff. So if you're brand new, hop on tonight at 10 o'clock. And it'll be definitely worth your time, guys. So, hey, everyone have an awesome week. Let's go crush it. If you need any help, like I said, reach out. Let's go get it. I'm going to stop this recording.